pieces of paper we use every day, but maybe know the least about: money. Have you ever wondered how governments decide when and how much money to print? Can they just turn on the printing press whenever they want and print billions of liras, dollars, or euros? Today, we're going deep into the real truth behind the money printing system, things nobody really explains to you. If you're ready, let's uncover one of the biggest secrets in the world of finance. When we think about money, gold immediately comes to mind, right? Well, that used to be exactly how it worked. It was called the gold standard. Under this system, a country could only print as much money as the amount of gold it had in reserve. In other words, for every banknote printed, there was actual physical gold stored in the central bank's vault. This system protected the value of money and prevented governments from printing money freely. But it had problems too. When an economy needed more money to grow, finding enough gold wasn't always possible. Wars and financial crises forced countries to print more money, and slowly, the gold standard started to disappear. And in 1971, when the United States completely removed the dollar's connection to gold, the world officially moved into the system we use today, fiat money. So what does fiat money mean? Simply put, the value of today's money is not backed by physical assets like gold. Instead, it is backed by trust. Trust in the government and the central bank that issues it. So the value of a 100 USD bill in your hand comes from your belief in the economic power and stability of the USA and the fact that the state says this is worth 100 USD. That's why the independence and credibility of central banks are extremely important, because once that trust breaks, the value of money can disappear overnight. Now let's get to the real question. How do central banks decide when to print money? Today, money creation is determined by the overall needs of the economy. Central banks constantly monitor the economy's heartbeat. They analyze data like economic growth, unemployment, and most importantly, inflation. If the economy is slowing down, if people aren't spending enough and factories aren't operating at full capacity, the central bank may inject money into the system to stimulate growth. This is called an expansionary monetary policy. But this doesn't mean printing physical cash and distributing it in trucks. In the modern world, there are more complex ways to create money. One of the most common methods is called open market operations. The central bank buys government bonds and similar financial assets from banks, and during this process, it creates new money digitally and transfers it into the bank's accounts. Bankaların elinde daha fazla para olunca, onlar da daha düşük faizlerle bireylere ve şirketlere kredi verebilir. When borrowing becomes cheaper, people buy more homes and cars. Companies invest more, expand, and build new factories. That's how the economy starts to grow again. So even if no physical cash is printed, money is still being created digitally through the banking system and pushed into the market. Another method is lowering the reserve requirement ratio. Banks are required to keep a certain percentage of deposits at the central bank. When the central bank lowers this ratio, banks can use more of that money to give out loans. That increases the money supply and stimulates the economy again. As you can see, the process is technical and indirect. But if it's this easy, why don't we just keep printing money and make everyone rich? Why not give every citizen $1 million? And here comes the most dangerous part. The unavoidable result of uncontrolled money printing is hyperinflation. Imagine this. The amount of goods and services in the economy stays the same, but the money supply suddenly doubles. What happens? Everyone has more money, so demand rises sharply. But since the number of products doesn't increase, sellers start raising prices. The bread you bought yesterday for $10 becomes $20 tomorrow. Even if your salary increases, your purchasing power keeps falling. Money literally becomes trash. History has painful examples of this. In Germany during the 1920s and in Zimbabwe in the late 2000s, people had to carry wheelbarrows full of money just to buy a loaf of bread. Money became so worthless that it was used as wallpaper or even to start fires. This is one of the worst disasters an economy can face. So printing money is a delicate balancing act. Print too little and the economy slows down, unemployment rises. Print too much, and inflation turns into a monster and destroys all savings. The job of a central bank is to walk this thin line. It must not tighten the economy so much that it suffocates, But it also must not loosen too much and unleash inflation. That's why central bank presidents' decisions can affect the destiny of an entire country. Here's another truth most people don't know. Money isn't created only by central banks. In fact, a large portion of the money circulating in the economy is created by commercial banks through loans. This is called bank money or deposit money. How? When you deposit $1,000 into a bank, the bank keeps a small portion as required reserves. Then it lends the remaining $900 to someone else. That person spends the $900 and the seller deposits it into another bank. The bank keeps a portion and lends out the rest again. As this cycle continues, the original $1,000 can multiply inside the banking system into $5,000 or $6,000 of total money volume. So every time we take a loan, banks are essentially creating new digital money. Most of the money in circulation is created this way, through borrowing. So, in conclusion, the money printing system is far more complex and sensitive than it looks. There is no gold backing money anymore, only trust in the state and its institutions. Central banks create money digitally to stimulate the economy, but they must use this power carefully, because opening the money tap just a little too much can unleash an inflation flood that destroys the entire economic structure. Remember, the value of the money in your pocket isn't determined only by the number printed on it. It's determined by the decisions of those who manage it and the overall health of the economy. Now that you understand this important topic, you'll start reading economic news with a completely different perspective. If you enjoyed the video, don't forget to hit the like button and subscribe to the channel for more deep and informative content. See you in the next video. Take care.